When we talk about the future of money, it's easy to think in terms of Bitcoin as digital gold, or Ethereum as the backbone of decentralized applications. But if there's one cryptocurrency that's been built from the ground up with a specific mission in mind, it's XRP. Unlike many other coins that were designed with open-ended use cases, XRP has always had a clear vision: to power the next generation of global payments. And as regulators, banks and fintech companies start to align with blockchain technology, that vision is closer than ever to becoming reality. The heart of XRP's use case is solving one of the most frustrating problems in modern finance: cross-border payments. If you've ever sent money abroad, you know how clunky, slow, and expensive the process can be. A transfer from the UK to Asia can take 3 to 5 business days, pass through multiple correspondent banks, and rack up high fees in the process. Even with services like SWIFT, it's still not seamless, and for people in emerging markets it can be downright painful. That's the exact pain point Ripple, the company behind much of XRP's adoption, has been targeting. Ripple created a system called On-Demand Liquidity, or ODL. Instead of banks having to pre-fund accounts in different currencies all over the world, ODL allows them to use XRP as a bridge currency. Here's how it works. Imagine you want to send pounds to Mexico. The bank converts your pounds into XRP, sends that XRP across the blockchain instantly, and on the other side, it's converted into pesos. The entire process takes seconds, not days, and fees are dramatically lower because you're cutting out all the middlemen. That's the promise of XRP in action. And this isn't just theory anymore. Ripple has already partnered with major players like Santander, SBI Holdings in Japan, and a number of remittance services across Asia and Latin America. At its peak, before the SEC lawsuit slowed things down, Ripple was handling billions in transactions through its network. That's not hype. That's actual money moving across borders, using XRP as the liquidity engine. What's fascinating is how this positions XRP uniquely in the broader crypto landscape. While Bitcoin is viewed as a store of value and Ethereum as the base layer for decentralized finance, XRP is laser-focused on one job: being the rails for global payments. And if there's one market big enough to make that vision matter, it's the trillions of dollars that move across borders every year. Now, skeptics will argue that banks already have SWIFT, that stablecoins are faster growing, and that XRP has been bogged down by regulatory battles in the US. But here's where it gets interesting. The SEC lawsuit that cast a shadow over XRP for years has essentially backfired. The court ruling in 2023 that said XRP itself is not a security gave the asset legitimacy in the US market. It cleared the path for American exchanges to relist XRP, and it removed a massive cloud of uncertainty that was holding back institutional adoption. Even more importantly, while the US dragged its feet, Ripple expanded abroad. The company has set up strong partnerships in Asia, the Middle East, and Europe. These are regions where remittances are a lifeline for millions of people and where governments are actively exploring digital asset integration. It's no coincidence that Ripple has been quietly involved in central bank digital currency pilots. Because if you think about it, a digital dollar or digital pound still needs a way to move value across borders instantly. That's where XRP as a bridge currency comes back into play. And here's the big picture. If the world does move toward a system of digital currencies, whether they're central bank issued or stablecoins, the bottleneck will be interoperability. How does a digital dollar talk to a digital yen? How does a digital euro talk to a digital peso? Without some kind of neutral bridge, the world ends up with digital islands, just as fragmented as today's banking system. XRP's core use case positions it as that neutral bridge. It's fast, it's liquid, and it's designed for exactly that role. This is why analysts and XRP supporters argue that the token has a shot at becoming the plumbing of global finance. It doesn't matter if people don't use XRP directly in their daily lives. What matters is whether banks, remittance companies, and payment providers use it under the hood to settle trillions of dollars in value. In that scenario, XRP isn't a retail plaything, it's financial infrastructure. Now, let's be clear, there are challenges ahead. Ripple still faces resistance from traditional banking giants that don't want to give up control. Competition from stablecoins like USDC is real, and Ethereum-based solutions could gain traction because of the size of its developer base. But XRP's edge is speed and efficiency. Transactions settle in 3 to 5 seconds, costs are a fraction of a penny, and the network has proven it can handle real-world liquidity flows. If regulators worldwide provide clarity, and the trend is moving in that direction, XRP could become a default tool in the kit of global finance. When we talk about XRP potentially powering the next global payment system, it's important to zoom out and understand just how massive this opportunity really is. Cross-border payments are a multi-trillion-dollar market. According to the Bank of England, over $150 trillion move across borders every single year. And yet, despite that enormous figure, the system that underpins it is built on technology from the 1970s. SWIFT, the messaging system banks use to communicate transactions, was revolutionary in its day. But today, it looks outdated, slow, and expensive when you compare it to what blockchain can do. This is the exact problem XRP was designed to solve. Its speed and scalability mean that, instead of days, a payment clears in seconds. Instead of racking up double-digit fees, it costs pennies or less. And instead of needing huge amounts of pre-funded liquidity tied up in accounts across the globe, XRP provides liquidity on demand. That's not a minor improvement. It's a complete shift in how money can move. Take remittances as an example. Millions of people around the world send money back home to their families. Migrant workers sending paychecks from Europe to Asia or from the United States to Latin America make up hundreds of billions of dollars in flows every year. But the current system bleeds them dry. Fees can be anywhere from 6% to 12%, which for someone sending $200 can mean $20 gone before it even gets to their family. XRP slashes those fees down to cents. And more than that, the money arrives instantly. For a family relying on that money for food, rent, or medicine, that speed isn't just convenient, it's life-changing. And that's why some analysts argue that the first true global adoption of XRP won't necessarily come from Wall Street banks, but from real-world use cases in developing economies. These are the regions where the pain points of the old system are felt the hardest, and where fintech companies are moving fast to provide alternatives. Ripple has already made inroads in countries like the Philippines, Mexico, and parts of Africa through remittance corridors. Once those networks are built, scaling up becomes far easier. Now, if XRP were only targeting remittances, that alone would be a massive addressable market. But the vision is bigger. Think about corporate treasury departments at multinational companies. A firm like Amazon, Apple, or Toyota has operations in dozens of countries, with revenues and expenses in dozens of currencies. Managing that flow of money is a nightmare, involving hedging, settlement, and constant delays. A network like XRP's on-demand liquidity cuts through that problem by letting companies instantly move value across borders at low cost. It's like giving them a superpower they didn't have before. Even governments are beginning to explore these ideas. Central bank digital currencies, or CBDCs, are gaining momentum around the world. China has already rolled out its digital yuan to millions of people. The European Central Bank is experimenting with a digital euro. Dozens of other countries are in pilot phases. But here's the catch. CBDCs are still national currencies. They don't solve the cross-border problem. A digital dollar can move quickly inside the US. But what happens when it needs to interact with a digital peso or a digital rupee? That's where a neutral bridge asset comes into play. And XRP is already built for that role. This is why Ripple has been quietly working with central banks behind the scenes. While details aren't always public, Ripple has confirmed it's involved in CBDC pilot programs, offering its technology as a backbone for interoperability. Imagine a future where your country has a digital currency, but the rails underneath, the thing that makes it talk to other currencies, is powered by XRP. That's not some wild theory. It's one of the most practical paths forward for how the global financial system could modernize. Of course, we can't ignore the elephant in the room: regulation. For years, the SEC lawsuit in the United States was a weight around XRP's neck. Many investors felt burned, exchanges delisted the token, and institutions hesitated to get involved. But the tide has shifted. The court's decision that XRP is not a security in itself has reshaped the narrative. US exchanges like Coinbase relisted it, liquidity returned, and confidence surged. Outside the US, where regulatory frameworks are already clearer, XRP never stopped building. In fact, in regions like the Middle East, Ripple has signed deals with central banks to explore payment corridors using XRP technology. This is where the conversation gets exciting. Because once regulation is no longer a cloud hanging over XRP, the door is open for institutions to step in. And if institutions do step in, the liquidity that comes with them can drive adoption at scale. Remember, banks don't need to believe in crypto ideology. They just need faster, cheaper, and more reliable systems. If XRP provides that, it becomes a no-brainer for them to integrate it. Now, at this point, it's worth pausing and asking, what does this mean for XRP's price potential? After all, for investors, adoption and utility are only part of the story. They want to know if it translates into returns. Historically, XRP has been one of the most volatile major cryptocurrencies. It has soared to incredible highs, and it has also been crushed in bear markets. But if its role as a bridge currency really does take off, then demand for XRP as a liquidity tool rises, which in theory could drive up price. Analysts have debated this for years. Some argue that XRP's supply, with a large portion held by Ripple, will cap its growth. Others believe that in a true global payments scenario, the sheer volume of demand would be more than enough to push prices significantly higher. It's one of the most divisive debates in the crypto world, but it's also part of what makes XRP such a fascinating case study. A quick word from today's sponsor. Ledger wallets help keep your crypto safe and offline. If you don't have one, your crypto is never yours unless you own the private keys. Our link is below if you need one. This really supports the channel. As we wrap up this deep dive into how XRP could power the next global payment system, it's worth stepping back and looking at the bigger picture. For years, the conversation around cryptocurrency has been dominated by speculation. People buy coins hoping they'll go up in price, traders chase volatility, and headlines focus on overnight millionaires or dramatic crashes. But what separates XRP and a few other projects is that it's not just about speculation. It's about solving a real-world problem that affects billions of people and trillions of dollars in value every single year. That problem is simple. Money doesn't move like information. If I send you an email, it arrives in seconds, no matter where you are in the world. If I send you money across borders, it takes days, it costs a fortune, and there's a decent chance something gets delayed or lost along the way. That gap between the speed of communication and the speed of value transfer is one of the last great inefficiencies in the global economy, and XRP is one of the very few technologies positioned to close it. Think about how transformative that could be. For individuals, it means remittances that no longer drain wallets. For businesses, it means treasury operations that can be managed in real time. For banks, it means access to liquidity without billions of dollars sitting idle in pre-funded accounts. And for governments, it means financial systems that can finally keep up with the pace of global commerce in the digital age. Of course, adoption doesn't happen overnight. Even the most promising technologies go through long periods of trial, testing, and gradual integration before they become standard. The internet itself took decades to reach mass adoption. Smartphones were once considered niche. Today, they're essential. The same could be true for blockchain-based payments. It may feel slow in the short term, but the trajectory is clear. The world is moving toward faster, cheaper, and more transparent systems. And legacy infrastructure won't be able to compete forever. Now, let's address the skeptics for a moment. Some argue that banks and governments will never adopt a cryptocurrency like XRP because they want to control the rails themselves. Others argue that Ripple's ownership of a large supply of XRP creates a centralization problem that undermines the project. These are valid concerns, but they don't erase the utility. Banks and governments don't need to love crypto to adopt it. They just need a system that works better than the one they have today. If XRP offers cost savings, faster settlement, and reduced risk, that's enough for institutions to use it, even if they never say the word crypto out loud. And on the supply side, Ripple has already moved toward more transparency, placing much of its XRP in escrow and releasing it on a schedule. While debates about centralization will likely continue, the reality is that markets respond to utility. If utility increases and demand for XRP as a bridge asset rises, price and adoption tend to follow. One of the most interesting dynamics we'll see in the coming years is how XRP interacts with central bank digital currencies. As more governments launch CBDCs, the need for a neutral settlement layer becomes obvious. Countries won't want their CBDCs to rely on each other's rails, because that hands control over to foreign powers. A neutral bridge currency like XRP solves that problem elegantly. And remember, Ripple has already confirmed it's working with multiple central banks on pilot programs. We may not see those partnerships fully in the open yet, but they're happening quietly in the background. For investors, this creates a fascinating scenario. On one hand, XRP has been written off by some as the banker's coin, or as too slow to deliver on its promises. On the other hand, if adoption accelerates, whether through remittances, CBDC integration, or corporate use cases, then the upside is enormous. In other words, the very thing that makes XRP boring to some, its focus on utility and payments, is exactly what makes it potentially explosive in the long term. And here's something every crypto holder should remember. No matter what asset you believe in, security is non-negotiable. If you're holding XRP because you believe it could play a role in the next global financial system, make sure you're storing it safely. Keeping coins on exchanges is risky. We've seen collapses, hacks, and bankruptcies wipe out billions of dollars worth of customer funds. A hardware wallet like Ledger puts control back in your hands. If this technology really is going to reshape the future of money, then protecting your assets should be a top priority. So where does that leave us heading into the next phase of XRP's story? The signs are promising. Regulation is becoming clearer. Partnerships are expanding. Central banks are watching closely. And the need for faster, cheaper cross-border payments has never been greater. We may not know the exact timeline, but the direction of travel is unmistakable. Let's end with this thought. In every technological revolution, there are a few projects that survive the noise and prove themselves through real-world use. The internet had Amazon and Google. Smartphones had Apple and Samsung. In blockchain, we don't yet know which names will stand at the top when the dust settles. But XRP has a real chance to be one of them. Not because of hype, but because it solves a problem the world actually needs fixed. That's why, despite all the ups and downs, all the lawsuits, and all the skepticism, XRP remains one of the most closely watched and hotly debated cryptocurrencies in the market. Its journey is far from over, and whether you're a supporter or a critic, you can't ignore the role it might play in shaping the future of global payments. And with that, we'll close today's deep dive. This has been your crypto focus for the day, looking at how XRP could power the next generation of the global financial system. As always, keep an eye on the news, stay sharp, and make sure your crypto is secured. We'll see you in the next update.